Hello, my dear learners. Welcome back to Online Shine. We learning the DYBMS Semester 5, the Commodity and Derivative Market. In this video, we're going to learn the types of the option, the components of the option, and some terminology related to the option exchange. So let's start with the components in the option. So first is strike price, very important. Strike price are those price which is the specified price and pre-decided by the both the parties, or we can say it is the term that is to be mostly used to describe the option in which the price are fixed in the contract. So the price are fixed, predetermined or specified price. So strike price is also called the exercise price or also called the fixed price. Now the next components is the option premium. In the previous lecture, in the video, we already discussed about the option premium. What is the option premium? It is the total cost of the call option when the buyer buy the option or exercise the call option, which give the holder the right but not obligation to buy or sell the underlying financial instrument at the specified strike price. So here is the option premium is total cost of the option, or we can say call option. Now in this option premium there are the two values. The first is intrinsic value. So intrinsic value is the initial, or we can say the primary use to the option pricing is indicating that the amount option in the money. So what is the in the money? In the money is mean that where the market price is higher than the spot exercise price, okay, strike price. So that is called the in the money in the call option. Now if we say second one is time value, or you can say the extrinsic value. So the portion of the an option premium that is the attributing to the amount of time remaining and until the expirations of the option contract. So it is to be the end of the expiration of the option contract of the attribution. So the intrinsic value, the primary value, and extrinsic value means what? Expirations of the contract. Now next one is time decay. Time decay. Decay means what? It compasses or something is passing out slowly. Okay, so time is whenever the time of the contract option is passing out, it is the ratio of the changing in the option prices to the decreasing in the time to be expiration. इसका सीधा सीधा मतलब ये है कि ऑप्शन प्राइस में कितना चेंजेस होगा जब ऑप्शन की जो एक्सपायरेशन है, जो मैच्योरिटी डेट है, वो क्लोज आती जाती है, तो कैसे प्राइस में क्या होता है? चेंजेस होता है. सो दैट इज कॉल्ड द टाइम डिके, और वी कैन से इट इज द रेशियो ऑफ द चेंजिंग इन द ऑप्शन प्राइस टू द डिक्रीजिंग इन द टाइम ऑफ द एक्सपायरेशन और मैच्योरिटी डेट. सो हियर इज द वेरी इंपॉर्टेंट कंपोनेंट, दैट इज द स्ट्राइक प्राइस, ऑप्शन प्रीमियम एंड टाइम डिके. Now let's talk about the types of option contract. So there are the three types of the option contract. So first one is at the money. So what is the at the money? In this situation where the strike price or the spot price, or we can say the market price, दोनों क्या होता है? हमेशा equal रहता है. Okay, again I repeat, the strike price and the market price is always be same, or we can say spot price. Now the in the money, as we say before, in the money means what? The call option where the strike price is below the market price. मतलब यहाँ पर market price ज्यादा होता है किधर? Call option में. Call option में market price is greater than to be a strike price. But in the put option there are the strike price is greater than the market price. Okay. Now the third one is out of the money. So out of the money is a term is used to describe the call option with the strike price that is the higher than the market price. अब call option में just opposite to the in the money, call option में strike price higher होता है किसके market price से, और put option में market price is higher than the strike price. So let's see in the chart, we can see here is the call option and the put option. So first we have seen the at the money. So the at the money means what spot price is higher than the equal to the strike price. But in the money, the spot price means what the market price is higher than the strike price, and in the put option it's opposite, spot price is less than to the strike price. And out of the money is spot price is less than to the strike price, and the spot price is less than strike price in the put option. So it is the just conversely with the each other in call option and put option. So it is very important in the examination point of view, in the money, at the money and out of the money. Let's see the next option trading mechanism. Very important. What is the trading mechanism here? So first of all, the option exchange. An exchange is a legal corporate entity organized for the trading at the security option or future, which is the governed by the corporate rules and regulation. It may be the utilized trading floor or maybe at the electronic exchange. So it is the corporate entity where the trading are placed and governed by the some corporate rules at the trading floor, जहाँ पर हम ट्रेड कर सकते हैं. So उसको हम लोग क्या बोलते हैं? ऑप्शन एक्सचेंज बोलते हैं. What about the over the counter? Over the counter option where the return for the specific buyer by the a particular seller and trade it in the OTC facilities. Now OTC market are those market where the unlisted companies are trading, or we can say it is to be unorganized market. The cost establishment of the OTC option contract, however, the higher than of the exchange option. OTC मार्केट अनऑर्गेनाइज होता है, तो इनके जो कॉस्ट होते हैं ऑप्शन के वो भी क्या होते हैं? बहुत ही हायर होता है. सो इट इज द हायर देन द स्टॉक एक्सचेंज मार्केट. It is again I repeat, the over the counter market is the unorganized, and it is continue over the night market, we can say. Okay, so the over the counter market is option trading are usually here to be traded in this market. Now the transaction on the option exchange. How the transaction in the option exchange market? So first of all, there are the two party. There are the two party, that is the buyer and the seller. Okay, so buyer and seller instructed their broker, buyer broker and seller broker, to conduct a option contract. Now buyer broker and the seller broker move on the buyer firm floor broker, and same the seller move on the seller broker firm floor broker. What is the floor broker? The floor broker is the independent broker who work and they trade it in for their client. Okay, अपने client के लिए वो क्या करता है? ट्रेड करता है ऑप्शन एक्सचेंज में. Now this both firm go to the option exchange. This buyer floor broker and this seller floor broker meet in the bit of option exchange and fix the price of the option exchange. Now they inform that option clearing house that we are traded the option, and after that they decided the price. Now the floor broker buyer and the floor broker seller reported to the buyer broker and the seller floor broker reported to the seller broker about the price obtaining of the option. Now, this buyer broker and this seller broker have also informed or reported to their buyer about the premium and here about the margin of the seller. Okay. Now what happened? The buyer paid the premium to the buyer broker and the seller paid the margin to the seller broker. Now this buyer broker have deposited the premium to the buyer clearing firm. Okay, and now this seller broker pay the margin to the seller broker clearing firm. Okay, now this both have to be submit their premium and the seller margin to the option clearing house. So this is the how the option exchange transaction take place between the buyer and the seller. Who is the clearing house? The clearing house is assume or act like the buyer and the seller. It is the middleman, or you can say the middleman who act buyer side and the seller side. So more information regarding or more we will learn the clearing house in the next chapter. Now this is the transaction on the option exchange. Now move on to the next types of the option based on the underlying asset. You know that the underlying asset is a stock, index, currency, and the option type, underlying asset type is future. So let's talk about in the detail of the option, stock option. So the stock option, it's obviously it is to be related to the stock exchange where the one party have to sold to the another party or give the buyer the right but not the obligation to buy, means what called option, or the sell means what put option. A stock at the end agree upon the price within the certain period on the specified date. So certain period of the specified date there is the stock option where there is a buyer the right but not the obligation. Now move on the index option. What is the index option? A financial derivative give the holder the right but not the obligation. So to buy or sell in the basket of the stock, or we can say the lots of stock in the one basket, such as to be the Standard and Poor 500 and agree upon price and before the certain date as so standard before to Standard and Poor 500 is a credit rating agency where to be a 500 index of the company. So an index option is a similar to the other option contract. There is a differences being the underlying instrument are indexes. So all the instrument in the, or we can say the different instrument are underlying in the indexes option. The option contract including the index option so allow the investor to the profit from the unexpected market moves or to the reduce the risk for the holding the underlying instrument. It means उनके पास ऑप्शन होता है कि अगर उनको प्रॉफिट लगता है, एक्सपेक्टेड प्रॉफिट अगर मार्केट में लगता है तो वो लोग क्या करते हैं, मूव करते हैं. अदरवाइज उनको अपना रिड्यूस करने के लिए रिस्क रिड्यूस कर देते हैं उसको होल्डिंग करके. सो there is the index option. Now currency option, obviously it is related to the currency exchange rate system. So the a contract that grant the holder the right but not the obligation to buy or sell the currency at the specified exchange rate during the specified period of the time. For the right, a premium is paid to the broker. Okay, so in the initially call option में broker को premium pay करता है buyer, which will be the depending on the number of the contract purchase. So currency options are one of the best way to the corporation or the individual to hedge, means to minimize their risk against the adverse or set of the movement of exchange rate. So the currency option have the optional, or we can say it is to be right but not the obligation in short. Now the last one is future option. What is the future option? Is future. In future, what in the future market, there is a contract give the holder the right to enter into the specified future contract if the option is exercise. The initial holder of the option would be entered into the long side of the contract. What is the long side means? What? Buyer. If the contract is exercised, the long side means the buyer is exercise this. But if the underlying assets in the future price or short positions of the future contract, it lets on the investor enter into the future contract. So the future contract, the short means what? Seller. The sell the underlying asset on the future date at the specified price. Okay, so the future option is customized. Okay, it is we can say customized, or we can say it is to be over the counter market. Now, this is the detailed information regarding of the components, types of the market and transaction of the option exchange. I hope you like this video. If you like, please like and subscribe the channel, and if you have any queries, please comment me below. Thank you for the watching.